Now I'm going to discuss with you what ERP, Enterprise Resource Planning. Once again, I'm repeating the full form of ERP, Enterprise Resource Planning. It is a software designed in such a way so that it can automatically handle the entire tax system. So just you have to input your data there. Once you input your data, it helps in calculating it enter the tax system, enter the tax liability. So ERP relates with the ITC, input tax, ITC, input tax credit. So this ITC also is a system calculating the tax. The ITC also system of calculating the tax in such a way so that it can minimize and protect the cascading effect of tax, the double effect of the tax. So you have to know in these terms what is ITC, what is ERP, to know the accounting report. So to prepare the accounting report, first of all, once we take the help of ERP, Enterprise Resource Planning System, then automatic data will be provided. We have to provide the data, of course, and automatically the ERP will tell us. The ERP will calculate it everything. ERP will minimize, ERP will protect our data. ERP will help the ITC also. So this ERP and ITC mostly interrelated. ITC always protect our double effect or cascading effect of taxation. It protects and it calculates and it minimizes the tax burden, tax liabilities. So GST report for preparing statutory GST compliance report generated from ERP system. It is always generated from the ERP system. Throughout the year, we have to put all our data in this ERP system. This is a very popular platform nowadays to calculate the GST. So through this ERP system, we can calculate the GST very easily, and it is used for return filing, reconciliation, and audit purpose, as I told you, as because once we uploaded the data in the ERP automatically gives you all the results. And in that case, what happened with the physical data? With the physical data, auditing is very easy. Because you need not have to search each and everything manually for verification. Automatic verifications we can do under the ERP programming. And it helps in reconciliation, corrections also. It helps. The difference, why the difference is that also the ERP automatically find out. And return filing. Of course, on the basis of the ERP, we have to pay the tax. Return filing is payment of tax at the end of the financial year. What is the total amount of tax? We have to find out on the basis of the turnover of the company, turnover of the business, and on that basis, it is mandatory for each and every businessman to file the return. That means to pay the tax. Right? So now, let us see GST R1 report. GSTR, Goods and Service Tax Return 1 report. Statement of outward supplies, invoice-wise details, what are the things required? It includes B2B supplies, business to business supply. B2C supplies, business to customer. Exports, credit and debit notes, filled monthly, quarterly. So, these are the components. These are the documentation. These are the areas which has been included under the GST report. When the GST report we have to submit, we have to pay the tax, we have to based on certain items, we have to based on certain documentation. So what are the documentations required for this? The most documentation required is mostly credit and debit notes relates with the export and import. File monthly and quarterly, whatever you are filing, that is also mandatory to provide. On the basis of this supplies, on the basis of these documents, ERP can easily find out your tax liability, our tax liability, business tax liability. So invoice-wise detail we want. So what is the invoice? This is a piece of acknowledgement prepared at the time of supply of goods and services, which contains all the details of goods has been supplied. The quantity of the goods, the price of the goods, where to deliver, the date, how to deliver, what is the total amount, everything has been mentioned in the invoice. So, detail of invoice at the time of outward supply is most. Outward supply is what? We are supplying from one place to the outside place somewhere else. Okay, that is the outward, going out from my business. So those things are there in the GSTRS report. That is report 1. And GSTR 3B reports. So two reports are there. One is 1, another is 3B. These are certain sections mentioned in the report. We have to calculate the GST in case of the supply only under these reports. Monthly summary return. Nowadays, it is mandatory for each and every business to submit their return monthly. That means we cannot wait for the entire year to calculate our GST. Every month at the month ending, not year ending, month ending, it is mandatory to file the report. It is mandatory to pay the return, calculate the return. So whatever the tax liability, we have to calculate monthly wise, month wise. For that purpose, what we have discussed, that invoice has to be ready. Invoice has to be ready. Invoice has to be uploaded. All the invoice, purchase invoice, supplier's invoice, you have to put it in the ERP. So it will calculate automatically what is your tax liability. It contains output tax liability. It contains input tax credit, net tax payable, no invoice level details. So it contains these three things mostly: output tax liability, input tax credit, and net tax payable. Output tax liability, input tax liability, and net tax payable. Total ultimate tax payable, what it is. Ultimate, not only input, not in output, but it contains output also, it contains input also. Output is going outside, input is coming inside, and ultimatum is net tax payable. Output and input, both the tax, if you compare and if you put it in the ERP, so it automatically calculate your tax, the balancing amount. That is known as what? Net tax payable. That is the total amount of tax we have to pay. Because in few cases we will receive the tax. In certain cases we have to pay the tax. So in that case, both the things when we compare together, when we put it in a ERP, so it will calculate automatically what is the net amount of that. Something may be receivable, something may be payable. Receivable and payable, if we consider together, and if it is less, plus minus definitely has to take place, and plus minus is there. So once we do all the plus minus of input and output, so automatically the net amount will come out. So for that net tax only we have, it is payable. Okay, that is the payable tax. That is the total amount of tax which we need to pay. The GSTR 3B reports include all this output, input, as well as net tax payable. Three things, remember. Please remember three things. Those three things only for GSTR 3B reports. First report we got, that is a very normal report. Second report, it is implemented in case of the output tax, input tax, as well as net tax liabilities, that net tax payable. Then generating GSTR report in ERP. Most important point. Generating GSTR report. Now this report has to be uploaded in the ERP. Enterprise Resource Planning. That is the software. GST master configuration, sales and purchase entries, what are required over here? Tax validation, auto generation of GSTR1, GSTR3B, export in JSON and Excel format. These are nothing but the terms which are there in the ERP format, which we have to maintain to calculate the tax. And for that purpose, GST report 1, GST report 3B, both has to be uploaded, both has to be entered. The meaning of this is nothing but uploading of your data in the ERP system so that they can easily find out without any manipulation, without any fault, they can find out your GST properly in an accurate manner. So what do we have to do in case of the ERP? We have to upload all these things, GSTR1, GSTR3B, as well as all the invoices, all the purchases, all the sales, so that we will get the results automatically. Input tax credit. As I told you that ERP is directly related with the input tax credit. Input tax credit always protect the taxpayers from the cascading effect as well as from the for minimizing the tax liabilities. Not only the cascading effects, how to minimize the tax liabilities. It always protect. So in case of the ITC, input tax credit, credit of GST paid on purchase, it includes, it records available if goods services received, valid tax invoice, suppliers paid GST, return filed. So this ITC always records all these different segments so that they can minimize your tax. They are recording the goods and services received also. They are recording the valid tax invoices. They're recording the suppliers paid GST. So return file, everything they record so that they can calculate the minimum tax liability which has to be paid by a businessman. So the main purpose of the ITC is what? To minimize the tax liability, and ITC always helps the ERP to put all the data on the basis of all these documentations. Next, let us go for ITC set of rules. There are certain rules which has been set up by the ITC. There are certain rules which has been set up by the ITC. And these rules are mostly in between IGST, CGST, SGST. Again, it is if it is CGST, CGST and IGST. If it is SGST, then SGST and IGST will come. Then again, no cross utilization between CGST and SGST. So in certain products, CGST and SGST, both are equally divided. If the total goods and service tax GST is 18%, so in that case, what happened? It is divided into two parts, CGST and IGST, CGST and SGST. So IGST and CGST. So it is divided. In case of the SGST, SGST plus IGST. In case of the CGST, CGST plus IGST. So totally for IGST, it includes IGST also, CGST also, SGST also. So it is integrated system where everything comes together. But in case of the CGST, only CGST as well as IGST comes. In case of IGST, SGST and IGST comes. But in integrated system, everything comes together. In all these cases, ITC set certain rules. This is actually rules set by the ITC. You cannot go beyond that, or you cannot charge more tax apart from these things. So in case of this CGST, you cannot set one more tax for SGST. In case of this SGST, you cannot put any again some CGST. Not possible. So whatever the rule implemented by the ITC, we have to go accordingly. Once you are paying the tax in CGST, you need not have to pay once again for the another, but the same product, the another tax, SGST. No, that is called cascading effect. You are paying to the manufacturer also, again the wholesaler is paying, again the retailer is paying. So this is the cascading effect. For one product, you are paying repeatedly the tax. So this effect has been removed by ITC. And ultimately, the taxpayer has to pay a very less amount of money. It has been distributed among everybody. Once one person is paid, you need not have to pay anything. But one has to be paid. And that has to be included in that product. So he will charge from next person, he will charge from next person, he will charge from next person. But ultimately, the one tax. One man, one tax. So this is all about the ITC. Okay, what is all about the ITC? ITC set of in ERP, automatic ITC calculation, system-based utilization, ledger maintenance is credit ledger, cash ledger, and it ensures accurate compliance as well as improves cash flow management. These are the key points. These are the key points which we have to learn under the set of ERP. ITC set of ERP. That means what? Now, three terms comes together. ITC, input tax credit, which minimize the taxation with certain implementing certain policies, implementing certain rules, which is set of ITC, which has been set by the ITC. And this ITC set of helps the ERP to upload everything to the ERP. This is enterprise resource planning. That is a software, that is a program where they will upload everything, and accordingly this ERP calculated the tax very easily with a full accuracy. With full accuracy, the accurate data you will get there without any compliance. So this is known as what? ITC set off in ERP. Both helps each other together, and together whatever they have calculated, that shows accurate calculations, accurate tax.